I'll be rolling corners in my minivan when it's -20 and icy on the roads, trying to
Yeah.
get back before market open.
All right, TSDR, I got the recording is started, so we can get started here.
All right. Hey, thanks for coming in, guys. We have the great pleasure of having Ross Haber on this evening for an interview over the past a couple years now. Bronco, you started reaching out and DMing traders and saying, "Hey, do you want to come on and talk?" And we've just been blessed about and grateful for how many people are so willing to come on and talk to people about their knowledge that they've gained throughout the years, their experience, their current market thoughts, recent trades, and drop some wisdom on us that hopefully we will be able to pass on throughout the years to people that listen to us. So thank you, Ross, for coming on.
Thanks for having me.
Why don't you tell us a little bit about yourself? We've been talking, to
Yeah, so I'll tell you, I'm luckier than I am smart. Started in the business as a retail broker, where the first book they gave me to read before the Series 7 was How to Make Money in Stocks by William J. O'Neill, right? The guys in that office used that book to pitch stocks to people. Um, Long story short, a retail customer introduced me called me up one day and said, "How'd you like to go work for William O'Neill and Company in California?" Right. And she was a William O'Neill fan, and we had been talking Can Slim for, quite some time, being that that's what that office did, and so on and so forth. And I hit it off with the manager of institutional sales. We became great friends. Long story short, Jackson, who
yeah.
I do the TML talk with, his father was my first hedge fund client in institutional sales. We became very good friends. He hired me away. I came in to resign to go run the fund with him. And, thinking I was going to get walked out by compliance, Bill came in, sat me down in the conference room, and um, offered me a position to stay and manage money at the firm. And Jackson's dad, being the guy that he is, just wonderful guy, is like, "Listen, you can't turn that down. You have to take that. Door's always open." And so he's been one of my best friends ever since. I stayed at O'Neill. I built a track record, as you know. I was, at the time, he would pick someone to do the workshops with him. So I hate public speaking. So I say, fortunately, he picked me because it was so helpful to everything that I know to have to, put it together and teach, right? He'd do dailies, I do weekly charts, but I would, public speak, I get up shaking. It's, so
There's with Bill O'Neill.
yes, I used to teach the IBD workshops with them. We used to do it like once a month somewhere in the country, right? So for a full day long, he was weekly guy, I was daily guy. We do questions at lunch, right? So it's, I used to complain when I had to do it. And now, I obviously look back at it and go, wow, one of the greatest things I've ever done, right?
Yeah.
That's my mentor. The one thing I've noticed what Bill does at work, he goes out of his way to make sure everyone has that skill. It's amazing. From the new, just I won't go on and on and on about Bill O'Neill, but he really made an effort to make sure everyone around him that could possibly, understand what he was doing, understand it, know it, and even at William O'Neill and Company, when I was there, it's probably about 1,000-ish people. It's a big campus. And I'm telling you, everyone all the way down to the newspaper salespeople got to sit with and listen to Bill and learn Can Slim, and trading was encouraged. So that's why I say luckier than I am smart, right? Listen, I did undergrad at University of Florida, business. I did what is it, finance and real estate, as it's not really a double major. It was a few extra classes to get the real estate major with finance, eco minor, 3.5 point, nothing spectacular. I was far from valedictorian. And I'll be honest with you, I hated doing sales and retail sales. And before I knew, 3.5, 4 years later, I was managing money for Bill O'Neill. So to me, I'm 28 years old, and just, my head was spinning. It's still one of the best experiences of my life, right? So I built a good track record there, and very fortunately, one of the Fidelity's everyone's biggest client, right? That's
Yeah.
an institution. So Fidelity's huge client of William O'Neill Institutional, and their mid cap growth fund manager used to talk to um, the manager of institutional sales, who is a good friend of mine. Long story short, he called him one day and said, "Hey, look, I'm going to run my own fund. I'd love you to, to come be my chart guy, if you will, right?" And he said, "I'm not interested, but I've got someone who might be." And he introduced them to me. And again, luckier luckier than I am smart. I got introduced to, to this guy. I went and met him in New York, and we're still friends to this day. We had a good run at it. We ran a fund for 6 years in New York, and then he just retired to go. He's older than me, and he was working on his ninth kid, so he was more interested in family than anything else. And since then I've just been managing my own money. There was a point where I was doing a newsletter, but I had no following on Twitter, which I didn't realize was literally a requirement if you plan on selling a newsletter for the stock market. So, and long story, I keep saying that I ran into Ryan and Nick were running a chat room. I was writing my newsletter. We had switched subscriptions. And so when I came to them and told them that I was turning off the newsletter because I couldn't stand Twitter and I needed to grow Twitter,
Yeah.
and it was I'll tell you, for me, it's more stressful to have to come up with a tweet that I feel like is valuable to someone than it is for me, to deal with a 3.5%, gap down, go down in the market type of day. Like Twitter makes me sweat, no joke. I just follow my rules
I
and I'm
love it.
used to it now, right? So yeah, then I got together with Ryan and Nick, and we morphed Trader Lion into what it is today, probably starting in 2017-ish, right? And yeah, and then Deep U started a few years ago, and so knock on wood, everything so far so good. The market's been pretty kind, and we have a lot
What
of,
do you,
I love my business partners. We have a lot of fun working together. Knock on wood. I'm the old guy. I'm happy the young guys keep me around.
Well, we got to talk to Nick, and he spent a lot of the time talking about how grateful he is and was to have connected with you, and he said without your validation, if you will,
Mhm.
he's not sure that actually he said that it wouldn't be what it is today. So, and and for me again, I said this is selfish. I just wanted to talk to you and get your experience and knowledge and story. And for that I'm also grateful. I believe Trader Lion is one of the most like modern day most valuable resources that exist. The videos and the content throughout the past 7 and 8 years is just incredible, and making a huge impact on people's lives. The question I was going to ask, following up about the
Yeah.
kind of institutional background to now, just managing your own money and trading. What is one of the main differences? Because, for example, a lot of people, like me, have never experienced that side of the market participation from the institutional side. What is something that you think is like majorly important to know, or something that is very valuable about that side of the market that most of individual investors might have no idea about? Or something that is impactful that you learned on the institutional side that could help someone who's 22, 25 now, trading on Robinhood from their dorm room or something.
I'll be honest with you. I mean, strictly from the institutional side, the only thing I learned was, the size difference, right? Right. Bill talks about the size problem. I learned that you can double 200 million dollars relatively easily. Once you get up to 5 or 600 million, it becomes wholly more difficult, especially if you're using margin and it's whipping around. I learned the very hard way a couple times what it's like to buy a basket of stocks that are too thin to be buying and the market's falling apart and you need to sell, $1.4 billion of stock, and it's just a night, right? So, I mean, really that's the thing that I learned, and that's what ultimately pushed me into mixing Stan Weinstein's methodology with Bill's methodology. So I had to learn to cheat my way in early, kind of thing, to be able to build positions and maintain the O'Neill philosophy, including the risk management. All I've really changed is where I take my entries, and so the funny thing is this: Stan and Bill, so much of their philosophies overlap, and then some of the biggest key things are polar opposites. And the that one big thing is, and I always say this, and not always, but Stan, like what Stan is buying as it moves from stage one into stage two, as a stock puts in its bottom, right? Bill will tell you that's junk off the bottom. And I've known Stan for a very long time. I, I went to high school with his daughter, so I yeah, it's funny. And I go visit Stan at his office. His wife is there. Oh my gosh! Or, the first time I went in a long time. She hasn't seen me since high school, and here I was at probably 49, 50. A few years ago. So very funny. And I see his daughter there last time I was there. So I'm very lucky I got to talk to Stan, and when I'm pressing stocks at highs that look ridiculously extended, he's going to tell you you're crazy for holding on to what I would hold on to for much longer than he typically would, type of thing. So, but otherwise, I've been able to meld the two in a beautiful way, right? We joke around at Trader Lion, call it Stan Slim, right? It's the
Yeah,
Stan
that's good.
entry and can Slim everything else really. But Stan will also tell you the earnings matter, group rotation, relative strength, all of that. It's all very similar to Bill's technicals, except Stan's buying, stage one into stage two off the bottom, whereas Bill's optimal spot is, that base breakout within 15% or so from the high on the left side of your consolidation, whatever it may be.
That is very interesting. That's Stan Slim.
Yeah. And when you're smaller, you get away with, in a good market, you get away with buying breakouts, buying strength, the market clean. If you got bigger positions, that you're trying to establish over time, especially if you want to pyramid in so you can manage risk. Yeah, starting early up the right side has been my thing. But from big to small, from institutional to retail, I think the retail guys have the benefit. If you're into fundamental research, see, that's the point. That's where I think the Bill O'Neill makes. I don't care about the street research. I have my own opinion. I'd rather not have it anyway.
Yeah.
And the guys that I know, fund managers, that their big thing is earning season. They build models in Excel, and it's all about those numbers. I would tell you this: Bill O'Neill will tell you, if you ask him between fundamentals and technicals, which are more important, he'll tell you it's 70% fundamentals, 30% technicals. So, all the cup and handles and, relative strength in the world, at the end of the day, it does have to be, what he would consider an institutional quality stock, not a penny stock that trades OTC or something
Yeah.
like that. And, those earnings and sales are hugely important. The way, so I think the retail trader has the benefit because what he did was he studied the biggest winners in each market cycle and figured out the most common characteristics among them on the fundamental side, which is current earnings and sales, annual earnings and sales, the I won't go through it all, but the whole can slim thing. At the end of the day, right? All of the big analysts, for example, David, my old hedge fund partner, he came from Fidelity. He learned from a guy named Jeffrey Vinnick, who was if you can Google him, he was kind of a hotshot manager of the Fidelity Magellan Fund when I was still young. So
Nice.
he learned from him. It was very cool. Jeff actually invested in our fund while we were running it. So
Cool.
I would say that
You
I
saw
love.
Peter Lynch ran the Magellan. Did Peter Lynch run the
Yeah,
Magellan?
but before, yeah, I would imagine before, right? Peter, yeah, I don't remember before or after Jeff Finnick, but yeah,
Yeah.
Jeff, yeah.
I was just making sure I've got it. I've got the funds right. Um,
Yeah, that fund, yeah, no, it's the big, it's the big The Magellan Fund at Fidelity, it's the big one. Yeah. So he learned from the guy that had a good, or one of the gentlemen who was running that fund and did a really good job.
The one that Charles Harris says he first his first soiree into the market was buying the top day.
Yeah, yeah, yeah.
I
So.
just we just got to see his interview with Investors Underground over this weekend.
Gotcha,
Where
gotcha.
he
Yeah, he tells it like that. Let me tell you, it's funny in the very beginning, Mike Webster and I shared an office as portfolio managers. Charles started shortly after that. And, when after the market top, Bill keeps you busy doing research, workshops, so and at that time it was still very analog. We were on, those big giant screens that, with the tubes. If you
oh
wanted
no.
to, yeah, I mean, you had to have, to have a double screen was quite, double flat screens then. They weren't thin, they were the big heavy. I don't know if maybe you're too young, but yeah, it was that long ago. And we were pulling books down from dusty archives and going through and looking at stuff and typing it all into the spread. So yes, um, I work closely with Charles, and let me tell you, I've watched that guy come into into some meetings like sweating. He's a he looks so non-threatening and comes. It's just so funny. He is a sweetheart. Love Mike and Charles, but let me tell you something. Charles is an absolute cowboy. Yeah. So
I love it.
yeah, listen, the ability to stay calm and come back is unbelievable. I know if that's an unbelievable skill. So yeah.
With all the people that you've traded with throughout the years, and you can include yourself in this category. Who's the best?
I think the young guys are on the right. I think, other than the big names that we already know. I mean, David Fellman is, my old partner. He's done, he's retired, but he's a secret monster. Well, yeah. But
I know that's a
honestly,
leading
and
question.
I think I might have told you this before, he probably doesn't believe me when I tell him I don't know if he knows he's this good. If I could give all my money to someone right now, it would be Amit Rai, my business partner.
That is
That's
quite the endorsement.
And what
yeah.
makes him so
And
special?
other than that, I've just watched him over the last 8 years or so, and it is absolutely unbelievable. And I mean, the performance he puts up consistently year after year after year, while he's doing, and this was going on in a big way, while he was still finishing his master's and running the electric grid for Calgary and yada, yada, yada. And what he manages to get done in a day, not to mention his insane, performance. I don't know how he does it all, right? I always joke with him, R at Rye, right? Like he has AI in his name. It's not fair, right? Because he makes me feel slow and stupid anytime there's just so yeah, I'm convinced he was coding already in the womb, and he has figured out what works for him, developed the discipline, and it's amazing. That's all I could. So I think it's these younger guys. I mean, you can go through the USIC. I mean, let's let's back up to Christian Qualamagi. I don't know if
Yep.
I how to pronounce it well. How do you get hello? That guy shows you live 5 grand into 100 million. Hello? I mean, how do you beat that? Really? I
Insane.
mean, he'll show you how to do it. And you could probably ask him a question on Twitter and you know what I mean? That's amazing to me.
Yeah.
The guy, I'll tell you who I think is just a giant stud and has an incredible, the mental, toughness and mindset is Mark Minervini.
Yeah.
Total rock star. End of story.
Yeah.
So.
You gonna connect us with Mr. with Minervini to have him come on next time?
You never know. You never know. I
I'm just kidding.
let me send him a text. I'll send him a link to the podcast. We'll see if he's interested. You never know. He might be willing to come on and chit chat. Yeah, yeah, like I say, to me, he's the greatest, but he makes himself available. So
That he does.
I've been trying to get Charles Harris for quite some time, but I just can't seem to get a response out of him. It's tough to get a hold of him. I don't blame him though.
he's busy. He's got a good social schedule. He makes me look like nothing, man. Let me tell you. He's got
That's
it going
great.
on, Charles.
Awesome.
I'll have to give him a hard time for you guys, and we'll send him a link too. And I can give Charles a little bit of a more of a hard time because we've
Of
we've
course,
known
yeah.
each other for years. Yeah, no, I'm fortunately, yeah, Mark has made himself I've met Mark a few times for a meal, and we've been in touch on the phone and whatever. So yeah, I'm definitely one of his fanboys. As much as you of like the older guys, to me, he's like,
Oh yeah. I
yeah.
mean, I've got books sitting right here.
But
His
oh, go
risk
ahead.
management. That he is just so like I hate to say perfect, but perfect at
Yeah.
is just astonishing. Um, and yeah, I'm just so grateful for the just the passion for trading and for the markets
Mhm.
of how accessible everyone is to talk about their experiences and to pass on the knowledge. So maybe someone else learns it a little bit softer, even though that everyone has to learn it in their own hard way, of
Yeah.
course. But
I learned the hard way. If you learn it, I started off with I beat my account up a few times. The biggest was being 80% long, one of those biotech stocks that was moving, 100, 120 points at a time, didn't put in a stop. It was 1999. I couldn't bring a quote with me. I went into a meeting and I came out and the thing was just annihilated. I had wiped out an account pretty good and had to start over again, right? And there was another time where I had, death by a million cuts, but nothing like I had, was more of a so I went through two, significant drawdown periods before I really started to perform consistently. And then I'll be honest with you, once I got my risk management down and disciplined, I've never had another debilitating drawdown even near that since. So yeah, and I guess like Mark, I do everything from a risk management perspective. If I don't have a tight logical stop, I don't have a trade. It's just that simple. I
what does
sit in
that look?
caps a lot if I have to.
What does that look like in maybe maybe two different examples? Like one, obviously, I know what you're talking the like tariff drawdown, and if that's not relatable, maybe like something like COVID, maybe, and then secondly, what does that look like during a normal and natural pullback to the 50-day moving average, like we just had back at the end of August, and kind of managing some of those periods in the market?
Right. So I wasn't doing, like I said, I wasn't doing much, but I will tell you this. I was sitting on the phone with Jackson when this happened here. I was on the phone with him and his dad just happened to walk into his office so it was the three of us. And, we all, we all called it. We're like, there it is, pull back to the 50-day shake, and it was a volatile day. It wasn't any, and let me tell you, it hasn't been, I finally, right. So, and this is when I finally started participating again and like it just worked out that way. So I remember pretty well.
Yeah.
I was still like, melding back in. I kind of missed Tesla. I will always I don't believe I'm late, right? So when I look at the market now, I believe we have mega potential left. So I don't care. I'll sit and cash and watch stuff go up without me. I know the opportunity of a lifetime comes every other day in the stock market. I used to drive myself crazy when I was younger. So there's a rule, I would be willing to. I don't know. I was in cash already, but not because my system pushed me to cash or I had, made a whole bunch of, or I've got no story except that I've been sitting in cash largely until I guess that conversation with, I just happened to remember with Jackson and his popped popped in the office, so it was over their speakerphone. And um, I really didn't start making a good progress until here, though, to be quite honest with you. I got chopped up in here for whatever reason, and I finally started making some good progress again over the last few weeks. So I always hope that, let's say I was in, I have very specific sell rules that push me out of my stocks. I don't ever have targets on the upside. I have more general rules, and I have, and depending where a stock is, stage one, stage two, stage three, not Stan Weinstein, but Bill O'Neill, like as we're getting toward, like I have very specific rules, both quantitative and qualitative, that will get me out. And normally I'm too, like Rye, I picked this up from him. I used to try and be more patient. And when this sort of thing happens and you have the 50-day right near the 21, and by the way, let me open this up here. Green is 10-day simple, cayenne 21 simple, the gray is 50 simple. 200 simple is red. Now you'll see I have two exponential moving averages, the 23 and 65, right? The purple, which a lot of times runs just very close to the 21, not much of a difference. It's funny that I will use a 21 simple, 23 exponential. Mike Webster's got to figure it out. Just use the 21 exponential, and just because I already have a million moving averages on here, I didn't want to add two more. You'll see so when I really want to look, I can turn it on and look, right. A lot of times it doesn't make a difference. And I will also do the same thing sometimes with the 8 EMA. That's very short term. Sometimes that's why they're off. On the flip side, I have these as they are because I have noticed, and it's not all, cues, it's all close together, but a lot of stocks that when they break their 21 simple will catch support at their 23 exponential or somewhere thereabouts. And the same thing with the 50. I've noticed a lot of stocks that break the 50 will get support in and around the 65. So I pay attention to those things. And then I'm always personality of a stock is a big thing to me, right? So for example, Rocket Lab, right? This is a nightmare. Talk about so this personality, bear with me, RKLB, is one that, right, no matter how good, right, I looked at it, I'll tell Jack or whoever I'm telling, wow, that Rocket Lab, let's finally getting tight. This is the spot. But I won't buy it, right? Because it's just this, I can't deal. I know me. The likelihood of me getting shaken out unless I'm putting on the whole thing and I get it exactly right is slim to none. And then I just know me, right? I don't, my brain hates these types of stocks. So personality is a big deal. And you'll see how this one, holds the 50. In this case, it picked up support at the 65. However, what I'm trying to explain here is to me, the 50-day is the logical line. Sometimes stocks will always break the 50 and get support at the 65, which makes that the relevant moving average. Either here nor there, you could get rid of these two exponentials. The ones I've used and always use religiously are the 10, 21, 50, 200 simple. I mean, that is what I've used since I started working at O'Neill. I've only added the 23 and 65 over the last few years. So, and it's really just, little reference. It might work for you. It might not. I think simple is better. So I just want to explain to you what all that nonsense is.
That doesn't just relate to moving average. Simple is better, always.
Yeah.
Is
So
there anything?
this personality versus here, and I didn't give you versus like an AVGO, which obviously isn't going to be as juicy when it gets going, but I tend to prefer, like I told you, I read you the stocks that I'm holding, stocks that trade tight, liquid, and the AVGO is not even that tight. The ones that hold, I love the ones that tend to hold the 10-day. When it breaks the 10-day, it goes to the 21. When it finally breaks the 21 second time in a row, 9 times out of 10, it's just done. So I try to pick stocks that trade that way and then manage my risk in that manner. So I'll be honest with you. Lately in this market, I have found that buying the constructive weaknesses has been extremely helpful. Buying buying strength, forget a breakout. Base breakouts I tend to stay away from altogether because I want to work my way in earlier, and I think there's less eyes on the earlier pivots than that base breakout pivot. You got the whole breakout crowd, HFT, algos, they all have that in there, and then they're playing the whatever games they play, and everything starts flittering on the level twos. And I like the earlier entries better. It allows me to ignore the base breakouts. But just in this market, I'll be honest with you, up until about 2008, 2009, right? The financial crisis. And, that's also the time when HFT and algos became really big. The market started to become like all of a sudden, right? All of the brokers moved off level twos like a while before that when everyone could be on an ECN, but then that HFT started, right? And I'm like, what is going on with level two looked broken the way they were flittering, right? That's just normal now, but that didn't exist before. And so the volatility, it's funny, you would think that more money overall, bigger volume, and the penny spreads would make it less volatile. I'm going to tell you that I would do it. I feel like, maybe I'm wrong, but in my mind, yeah, I feel like I would, I wish we had fractions back where people would, step up with some size and I could, read coulda, woulda, shoulda. Somebody moved that cheese for me a long time ago. But now I feel like to me, 130% margin now feels like when I was 200% and pushing it on day trading margin. And, the margin department's calling me at 337 going, you got to sell something, right? That was always the case. And now I feel like you get 120, 130% in, it feels like that 200 plus percent. So I also do a lot of that. Like I think you and I were discussing earlier, AMD. I do a lot more anticipatory buying now when I see a stock tightening up in a group that's working. Whoops, I didn't mean to make the volume disappear there. And it's funny, I was discussing for uh, this with we both, if I'm not right, we were collecting it over the last
The
few
exact
days.
same penny our
Yeah.
entries are.
So he told me our average price is exactly the same to the penny. So in the old days, I wouldn't even be worried about this because I'd be like, "Boop, I just buy it on strength. I don't care. Gap up the 50-day. And maybe you get lucky here and it just holds. That's ideal. But in the right market, maybe it gets cleaned up for you. But prior to, I'm going to tell you 2000, right? That sweet spot for me anyway, the mid 90s to like 2008, 2009, and that fractions were gone at that point. But it feels like that's when it really just started to get fast, wild, and crazy, like harder to buy strength, get follow through. And it just seems like it got a little more difficult. So I do a lot more anticipatory buying. Um, like this. Let me see if I can.
So what does that look like? How many days are you building into an AMD position? Are we talking about over the past 6-7 days, or are we talking like the last 2 to 3?
No, we're just talking about the last 3 or 4 days before the breakout.
Okay.
So Nvidia here, right? So I'll be honest, I started here. I bought a little bit on the breakout, and let me tell you, I'm glad I didn't buy much because when it starts dunking back under here, I was sweating. I wait usually, I'll not, 9 times out of 10 wait till the end of the day if I can. It wasn't a problem for me. So I would, and after this started to happen, I actually added NVIDIA on these last 2 days near the close up above the 10-day, right? In anticipation of the breakout. Old school, I'd wait and just buy here, and 7, 8 out of 10 times it just worked. That not so much anymore. You get a lot of retests and failures, I find now, much more than you used to. Um, and my theory is, right, the base breakouts to new all-time highs, right, the Dr. Wish green line breakout, there's a lot more eyes on it than there is, down here when and this is one thing I look for. I love the Stan Weinstein stage 1 to stage 2, and I love when all the moving averages kind of, bunch. And this may not be the best example, but they start to converge in a tight bunch and cross underneath price and begin to expand. That's a good sign. And when you can see a whole group of stocks setting up similar patterns doing that, that's one of my favorite things to see too. Right. So that's one of my qualitative clues that will um, tell me risk on, right? And that early in a trend after a follow through, right? So you can imagine in April, all through here, that was the time, while I had a million things going on, trust me, I was looking, drooling. But yeah, that was the time to get heavy. And I'll be honest with you, a lot of people are worried about what they missed here. If you were to sit in and I'll tell you, and this is to make you feel good. If you were to go sit in a meeting with Bill O'Neill and, tell him, but you missed all of this, he would give you, he would give you his lecture about how none of that matters, all of the resistance. And I'll be honest with you, if we're at the beginning of a new, larger move, and these stocks, and there's many of them, just breaking out to new all-time highs at a big long basis, some of them going back into, 2021. The ensuing move is going to be so big that all of this will look like nothing. So don't be upset over moving that. You know, the potential from here should be huge. And he would, and he would tell you it's really nothing to be worried about, really nothing to worry about, and that we're just getting started here, as crazy as that may sound.
I don't think it sounds crazy at all.
Yeah.
So like this based on the video, this would be like the ideal or not ideal.
So yeah, I thought let's see. I'm just gonna pull up Hood. I
Oh
had
yeah, yeah,
I don't have this. I do have a position in Hood, just not my main account. So I guess I should say I do have a position in Hood and ETHA, not in the account that I'm looking at from a while back.
nice.
And Hood again. I guess what I'm trying to show is I find it, and this was one I bought small. I love the ones that, like I said, right? They break out, they follow through, they hold the 10-day until they don't. If it gets support at the 21-day, great. Sometimes I get shaken out and have to buy back. I was lucky enough that I put on a small enough position far back enough that I I, I didn't even think to look at it really, right? Because I had bought it early enough. And what I loved about it is I will tell you this, had it been in my main account and it's so easy to get shaken around in here. I, it honestly gave me perspective. Having it small in another account that I almost forget to look at. Um, yeah,
Like a little mental health mental health
yeah.
class.
Well, no, it's not even what I want to learn, what I want to be able to do is be able to do that with a 10 or a 20% position, right? And so I guess the idea is to, be in back here. Um, Nevertheless, Hood, I love, right? We just broke out, green line breakout. Dr. Wish green line breakout was here. So even though it feels like and trust me, this one, every time I look at it, even though I know better, I'm not going to lie, right? Like that FOMO makes me break out in a sweat a little bit because I should have a much bigger position than I do, so on and so forth. But I also know there's no reason to do that to myself because this breakout on Hood, if this is going to be for real, it literally just broke out, right? So if I were to show it to Bill and show him I was sweating, he would have some, after he'd yell at me, nicely as my friend. He'd be like, he'd give me a stiff reminder of how silly I'm being. So if I just want to let everyone know that you may feel very foolish. But this is the missing it. We've really got a ton of, I believe, potential from here. The reason I went back to Hood, it's liquid tight, respects key moving averages. When it finally starts to break, you get out. And this could have easily shaken you around, right? You get two closes under the 21-day moving average here, right? It didn't shake you here if you played that game, right? You had one close below the 21-day. Here you get pushed out and now you've got to buy the stock back. Um, so that's and if you don't add it back in here going through, that's where it becomes tricky. Um, I want So this is one that I want to have a big position in that I just let get away from me. But I will always focus on the big liquid names that tend to respect key moving averages, logical areas of support, like the tops of prior bases. Um, PLTR is another one of, so this one has a much, it's wider, looser, right? It's not like a hood that sits on top of its 10-day, but it has a pretty good respect for some, the 21/23. Um, to give you an idea, so this is one I actually started buying off the 50-day. I got shaken out of a lot of it during that same time. I'll give you another one. Roblox is another, to me, big liquid name that's just, so PLTR already broke out. Roblox is right near that green line breakout land, right?
Yeah.
So this monthly is what keeps me. So this is a perfect example. I started Roblox back here off the 50-day, very small. I added in here and got shaken around, but I managed. I've been lucky enough. I added it back. Um, off the purple line for I just had to have it right during those days during while I was doing that I had the very short term right declining tops line and I just told myself whatever I'm buying here is going to be break even. It has to work. And a lot of times I'll do that, right? I'll pick that my line in the sand or I'll wait for a stock to shake below, make the U-turn and then make that average my line in the sand. Sometimes I'll put on as much as 10, 15% and my sell stop is break even. And believe it or not, I managed to, I'm still holding on to it and added just a little bit more today off that 23 day. And I'm ahead enough on it that I can let it come to the 50-day as much as I would hate that it's not going to push me out of my position, right? And that's how I've backed my way into it. But that 50-day, like any big, here's one that I think is a valuable Bill O'Neill thing. Any of these big leaders, Roblox, A-Lab, the first pullback to the 50-day is pretty much 100% of the time a buy, right? You got to manage your risk, but that Bill O'Neill will always buy that first pullback to the 50-day. I just did it with A-Lab yesterday, right? So, and this is it. And how I do it, I've made people laugh before because I'm a position trader. I look at daily, weekly, monthly, as you see. I will watch it hit the 50-day bounce. I then put it on a 3-minute chart right on my trade station because that's where I have my account and place my orders. And I just wait for the U-turn on a 3-minute chart with this, you could put a stochastic on there with a declining tops line, and I will put on a big giant chunk, and part of it might be break even, the rest will be at the low or the 50-day moving average. And most of the time it works,
Is
but
that
it's not every
at market
pullback.
open?
I'm sorry.
At market open?
Yeah, yeah, right around there because I know yeah, whenever that was around here, wherever it was today, was that at open. Um I was doing it with Jackson. He's the one who yelled at me that he bought it before me. Yeah, so yes, right at the open, I flinched and yeah, he got a better price than I did. He bought it right on the 50-day. And I told him, I'm like, Jackson, I don't have the balls to do that. I'm gonna wait for a bounce and buy the U-turn. So I bought it later. But that's what I did.
What does a U-turn? What does a U-turn look like in
Here,
here?
you want to look at a 3-minute U-turn?
I
Let's
sure
look
do.
at Oh, do we have I think we have 3-minute on here. Hold on. I think we do. Oh, here. Way back in time there. So, so where is the 50-day? Basically, Jackson bought as soon as it touched the 50-day as it was coming
This
in.
was today's gap up up over 200. So the 50 days right around
Oh,
190 on
one.
this. Yeah, 50 day is at one.
Oh, I
Well,
got you.
yeah,
One.
185. I've currently got it at. So
But we're talking today's open, right?
oh, today's open. Is that what you're looking at for the U-turn?
Oh no, that's right. Yesterday was 50. Here, hold on. Let me look at the daily again. My brain. Yeah, no, it was yesterday. You're right. I'm looking at the wrong day. So let me go to the low of yesterday and I'll show you. Hmm. Thank you for that.
Oh yeah. pull up info.
Voila. Okay. So Jackson is buying it as it's coming in. Whatever that 50-day line touch was, he was immediately buying it. Here's all I'm doing. I'm waiting for the mini, like an IPO U-turn on a weekly or a monthly or
Gotcha.
year, monthly over years. I'm doing this. So he literally was buying it wherever it was on touch it much closer to the 50-day. I waited till here.
Gotcha.
I bought that stick and then I used the low of the day as my sell stop.
Yep.
I put on a 10%, and I'll tell you exactly. I put on a 10% position. So I got a 10. I wish I put on 20 now, of course, right? So I put on 10, but that's what I do. I watched it hit the 50-day, it bounced, and then I'll watch an intraday chart, and there'd be nothing wrong with waiting until here to buy it. But because I'm an O'Neill guy, I will always tend to wait for it to show me that it picked up support and then buy strength within, right? That's still strength within weakness, if you will,
Yeah.
right? So
Yeah.
Yeah,
constructive
yeah.
weakness. So yeah, and if
And then did you add to that today?
I did not. I don't think so.
Gotcha.
Would
Okay.
you, in what scenario now, maybe back on the daily or weekly chart, would you be,
I did not add. I did not add.
in what scenario would you be interested in getting up to a 20 to maybe 25% position, like you said?
Absolutely. Yeah. I'm absolutely this is a big leader, right? First pullback to the 50 days. So yes, I will absolutely be looking to put on at least another 10%, if not 15, I will take my biggest positions up to 30, 40% usually. I'll have two or three pushing me around there.
Hmm.
Sometimes I have a lot of times lately though, like I would pick something wild and crazy like we saw Quantum today, right? Just push
Yeah.
out RGTI, ION. Let's look at here. Let me do a refresh here. Um, my favorite three RGTI, IONQ, and QBTS, right? So normally right, these would be my performance enhancers. Lately, I've been going old man style and making my performance enhancers the stocks that I'm already in. So what we call that O'Neill, what's in swinging around your cores, right? When you're kind of enhancing your performance day in swing trading. I would usually do it with, quantum or biotech stocks, but I'll tell you what's been happening lately is I'll be doing really well on all my liquid proper William O'Neill names. And then when I start messing around with this, I wind up chopping myself up and then it's just not been ideal for me. So lately I have been, if I'm buying extra, I'm trying to buy, if A Lab sets up perfect for me, and let's say I've decided all I want is a 25% position, I might buy 30% or even 35% with the intention of selling that extra as soon as it gets, I think I talk about this all the time. And Bill O'Neill used to do this. If you want to sell something proactively like that, right? If you're going to overbuy it to sell it, look to the left and go about how far does it get off, let's say the 10-day moving average over here, right? You got to look on a log chart. So the distance over here matches the distance over here. But I shit you not, he'd look with his fingers and he'd here and he'd go, and then he put it over here and goes, well, that gets you to about 100 and whatever, right? And that was it. And I mean, God bless you're buying extra. It's a great place to sell, and you'd be surprised, right? You just follow the personality of the stock most of the time. If it gets about that far off the 10-day before it eventually pulls back, that simple.
Yep.
You know?
Yeah, I do the same thing with a thumb or a finger sometimes on the screen. Like
Yeah.
if it's a thumb's length away from the 9 EMA, then we're getting a little
Yeah,
bit
I mean,
attention.
when I was a kid, just sort of, I thought that was the greatest thing ever. That it was nothing fancy. Just look at the personality, and if it was about that much here, it's about that much there. Just if you're looking at an arithmetic chart, be aware that stuff gets squished the further back you go, and you put it on a log chart to make sure the distance is comparable. If
So something like this RGTI, is this in your wheelhouse? Are you ever trading this? Did you?
I didn't, I'm still in low aggravation mode. This is the
Mm,
kind of thing where, I might try, buying it off the 10-day and just get lucky enough to catch. I didn't though. I didn't. But yeah, It is absolutely tradable. I mean, I'll be, if you want to laugh, Ray was laughing at me. I got very lucky. I was trading this as a performance enhancer. You'll notice
Oh,
Oh
the, the last
no.
day of trading here, it got suspended by the SEC for price manipulation.
I
that's
saw
right.
that. Yeah, because we were on Zoom and I was like, wait, why is
I was like,
QMM not trading
holy
today?
yeah. I looked and I was like, oh my God, thank God. I was trading it. I was in and out of it, flipping this day. I had a great day with it. Thank God I didn't hold any. I thought about holding some. I just didn't.
Because the money's then locked up, isn't it? Like until it's
Yeah, yeah. I mean, who knows? Maybe it opens at 30 if and when they open it. I have no idea. Maybe
yeah,
not. I don't know. But yeah, that's not a good thing.
yeah.
Hey, I'm curious, what do those little X's represent on your chart there?
Thank you for asking. So here, for starters, I'll show you what those are is it's marking relative measured volatility. Anytime it's in this band, and you're like, Ross, can't you just look and see if it's tight or not tight? And yes, 9 times out of 10, I can see tight action, but sometimes on a whippier stock, right? So any time, I like simple, so I don't have this extra panel of RMV and another squiggly line that every time that this line is in that band, I actually have it set between 0 and 7. It puts an X. So I know on a relative basis, it's tight there. Right. And so instead of having
Gotcha.
a band and having a look and then look up and see, um, you'll see here on my technical patterns, if we come, that's just the only thing I have. You'll see relative measured volatility, right? Um, and so my band off the bottom is 7. And yeah, so rather than having the whole thing, it lets me know.
Yeah, I was looking at your RGTI chart and that X pretty much caught the pivot off the low almost like every time it came off the low. I was like, whoa, I get it. What is
Yeah,
this?
our friend Richard Moglen actually came up with this on his own. He created this indicator in deep view from his noggin. So
Yeah,
yeah,
there's a deep view specific proprietary like indicator that right that you guys
I
created.
believe so. Yes,
And
yes.
you said it
Richard,
was you said Richard created it?
yeah, yeah. Richard
Very
created
cool.
it 100%. So.
Very cool.
So yeah, if you're wondering, will I trade the quantums? I mean, yes, I traded this, I trade SMC. Yes, I will trade the crazy when it's tight like this. And
Yep.
honestly, I can't tell you how lucky I am. I mean, this is exactly one that I would do that with. But I also know this stock can move $15 in 4 minutes, and I just didn't want to, if I was wrong, right? I didn't want the gap risk, so I didn't hold it. And thank you.
Yeah, no
So,
kidding.
yeah.
What sort of sizing are you doing on something like this or like a QS, like a quantum scape?
500 shares. Nothing crazy.
Okay,
500. That's it.
gotcha.
That's it. Yeah. I'm not whipping around 5 or 10,000 shares or anything crazy like that. Just 500 shares, performance enhancer. And because this thing's, I'm doing it thinking I'm looking for when it was happening. I'm thinking I'm going to get a rip like this out of here. Right. That's what
Yeah,
I was looking for. And I figured, if I can get a $30, $40 rip on 500 shares, it's a nice little, makes up for some commissions. That's all. It's for fun more than anything. I talked about this with Jackson. He was listening to Paula Maggie. Like
yep.
it, you sit here, right? It's very hard. The funny thing is, you put me in a casino with $1 billion. We're gonna go to the buffet and leave. I hate gambling. I hate it. I don't. I just. However, when I'm sitting here, I can't stop buying. Right, so I'm very limited. If a real performance enhancer, like you're saying, yeah, I might take on the quantum names because there's a real theme,
Yeah,
theory, a whole thing there. I will actually take um, a 10 to 20% and hold on to it for a few days. But
gotcha.
not surprisingly, this is Chinese stock. So
That is wild that you brought this one up. Is that something that you track? So I know that you're much more in the right, that position trader, the
85, 90% of my money is in ALAB, PLTR, Micron, NVIDIA, AMD, Roblox, Hood, right? In another account. I screwed up the Hood trade in this account. I got it good in my other account because I bought it small. It was early. I didn't pay attention to it. I got a little too over focused on it and messed that up even. And and the funny thing is, on the flip side, I think Rye might have hit that thing absolutely perfectly, right? So even sitting with him, watching him, I still messed it up, right? So, but
Um,
yes, it doesn't preclude, but yes, it's I keep it very limited on something crazy like this. Yeah, there's no uh, I watched the what is it, the ADR, average daily range, and
yep.
watch it on the intraday and go, how much can I watch go up, or or specifically down 30 or $40 and not be upset? And that's how I figure out my position sizing on it. So I wouldn't be thrilled if I lost 30 or $40 on 500 shares, but I'm not gonna lose sleep at all. So
On one of those positions that you're building into, like Nvidia, for example, or even Roblox, what is your plan, or what is your stop loss throughout at the process as you're building into it, and then as it begins to advance out?
So, I mean, right now my goal will be, because I bought it pretty much, my average is up off is on the 50 day. Um, as long, yeah, if it does come back in and test the high, right? So I love buying it tight here off the average, because then I can ignore this after it's extended off the 10 day. I don't have to buy that breakout where this is what I used to solely wait for. And now I've noticed a lot of times, so much now, you get a retest. If it gets away from me, I don't care. I've already got a nice position. And the next ad for me will be the next place I can have that optimal risk control.
Mhm.
So if it pulls, fades back in and tightens up again, I would consider, putting on quite a bit more versus that level base. And I'm always figuring out how much am I up. But my goal, honestly, would be able to get an average above that 50, my average cost of, so that the 50-day can become my trailing stop. You know what I mean? That's all what I love. I mean, so I use the 21 day until I get there. And then if I can make the 50-day my sell stop on a core, I will always try to do that, especially early on. Now, if it's, a stock that's pulling back to, that's, third stage base, it's already pulled back to its 50-day twice. Now I'm going to be a lot more cautious. So NVIDIA, I would make, right now I got it 20% there, right? Because I'm just doing it versus an average. I would make it, Nvidia, for me, I'm not going to say it's super slow, but it's a little slower than, let's say, Roblox
Mhm.
or A Lab, or, one of the other ones.
Yeah.
Um, So, but yeah, if it pulled back, I'd say it's it's big liquid. I feel comfortable with it. I'd probably get it to 30% and then wait for it to get about that high off the 10 day and sell 10% and just have my 20%, my core 20% in NVIDIA. And I'd love to see a personality change and see it get a little more powerful. But, if that doesn't happen, that's what I have the A lab for. And, you can keep it. And if you want that kind of power, then you buy a semi with that kind of power, like a CRDO,
Mhm.
which was, buyable many times from this point after the market followed through. Caught my eye today, right? Finally reclaimed, squatted at the end of the day.
Yeah.
Not great, but definitely a big chip leader, and, relative to NVIDIA, which doubled-ish off the bottom, right? From here, we're 30 to 150. That's a heck of a move, right? So.
This has been a huge winner for me, CRDO.
Yeah, and this, my friend, I mean, this is a big, and this is another one. So I missed this one, but this is that big institutional quality where if you can get in down here, sometimes I'll buy before the average, before it gets above the averages. I prefer, if I can, to be reclaiming a key moving average as I get over, let's say, a key swing high to the left. That's kind of like my ideal setup, as the relative strength line is, that stage one to stage two, the relative strength lines crossing, or I'm sorry, all of the moving averages are crossing. The relative strength line is either, let's say, making new highs ahead of the price, ideally, or at a bare minimum, at least getting back above that 21 day exponential moving average. That's what this is, by the way. And I stole that from Michael Webster. That's the key, so to me, that's the moving average to use on your relative strength if you're going to use one. Um, so yeah, CRDO is yeah, so yeah, great trade there. This is a big leader. This is the type of personality that I'm always going to look for a CRDO as opposed to an RKLB that just this is aggravation free. You know, if assuming you buy it correctly, or let's say you didn't even get it until here, you were buying it. This is kind of like my thing. I'll start to buy it off the 10-day here, and my angels are nice to me, and I don't even have to look back, right? So I'll be honest with you, I never used to buy like that. I was always buying on strength to an extent.
Mhm.
More recently now, I'm either buying tightness in anticipation of, or I'm waiting for the strength and then waiting to buy, the pullback after it shows me that it's gonna bounce and go again. And then I can manage my risk from there. And I'm able to put on much bigger positions with super tight risk.
Right.
Whereas, you know, in my old age, I've gotten less. In my old age, I'm 53, but I honestly, my tolerance for aggravation is not like Charles. You know, Charles Harris still has. I don't know how he does it. If I sweat watching him trade. You know what I mean? So, and that's the difference, right? So he's a total madman and a total badass. And the thing with him is it's just even if he beats himself up for his recovery ability to recover is incredible.
No kidding. Yeah, I like buying the like the shakeouts, if you will, much more over some of the breakouts, some of those, just quick drifts below, or right
Hmm.
at the moving average, and then the quick little reclaim. And I'm like,
Hmm.
okay, I've got my buy spot, I've got my clear stop, and invalidation. Like,
Hmm.
my job's done for, until
Yeah.
trade management,
It's
of course. But
yeah. And let me tell you something in 1998, 99, 2000, if you didn't chase a breakout, good luck.
yeah,
So
I actually wanted to ask you about
I
managing
got
money. Yeah.
it's still so primed in my brain. I still have to fight doing it because I made so much damn money doing that that it's like I can't get it out of my head.
by breakout, you like
When I say breakout, I mean like Bill O'Neill classic.
yep,
Wait for it to go through the high of the handle, like here, PLTR today. I'm pretty sure it went through. Did it not? Let's call this a roughly a 7 week cup in, right? Here we got
yep,
our cup. Here's our little handle here, high of the handle. I would wait to buy it. Well, we're missing the volume here, but assuming, volume picked up in a meaningful way and it traded through the high of the handle, I'd just buy that. I had no problem. I buy 20% there. And sometimes it retest and I'd let it shake around. And, and then so that 7 to 8% sell rule, by the way, right? We
mhm,
all know the mathematical reasoning behind that. Once you get beyond 8%, nine, especially double digits, to get back to even, the money you need to make back to get back to even gets exponentially huge. So that's the first reason you want to really limit losses to 8%. So where people get screwed up with the Bill O'Neill thing is you buy the breakout and and really if you are buying a can slim name, meaning an early stage base, that means all the can slim fundamentals, you're in an uptrend, it's the group is, it has to be that ideal situation. I'm telling you, it still works. You can buy the breakout, and if you're willing to sit through the retests and all that, because I've looked many times, those stocks never shake never go 7 to 8% below that pivot, which is what his study showed. But it takes a heck of a lot more patience now, right? So you get the retests, and then it becomes a matter of in a market that's working well, that's super cooperative. If everything's working over here, yeah, I'm following my rules, but I'm getting bounced around and I'm missing everything over here, kind of thing. Um, so yes, to deal with the faster and more volatile market, that's just what I've been doing. But I'll be honest with you, I did in the very beginning when I had less experience, I would buy the breakout and I would sit through a lot of pain watching shit bounce around and just sweating until it worked. Um, But I will tell you this, when the market was cooperative during those times, like 98, 9, when you were in a group and things were working, if you didn't buy it, like it, if it was breaking out like here, right, and you weren't willing to pay up here, see you later, you're gonna miss it. And
It was
everybody
that
knew
wild,
that.
huh?
So
That's crazy.
the fight to get in was insane. Everyone like, right. So you saw and it, the pile in, and if you weren't willing to pay up for stock, you would miss it like crazy.
Wow.
So yeah, it's a whole new mindset to me now going, okay, entry's always been, it's very, right. I always say you're buying right is your best defense. And what I mean by buying right is, knowing your system, I know my sweet spot,
Mm.
but I get itchy to buy stuff out of my sweet spot. I see, the QMMMs of the world, set right. And that's where I become a gambling junkie. So, right, that's I guess so that's my gambling, I guess, and that's when I'll limit it. So anything like that, and then sometimes if it's not a performance enhancer at all, and I have my cores on and I don't want to touch anything, right? I'm 120, 130% long. I'm not interested in touching anything. Then I'll devote very even less, just to get that itch out. And Jackson said he heard, Qualamagi talk about this. He'll just keep it very small. If you want to do your gambling, gamble $5. You know what I mean? Like, so if you walk away and gamble so small that if it goes to zero, you're still fine, kind of thing. And that way you get the itch out of, trading those. And sometimes, no joke, Jackson laughs at me all the time. I'll make it 100 shares just to get the darn itch out. It's just make it irrelevant, and it's awesome because I can't tell you how many times in the very near term, especially lately, I'm just dead wrong. So it's really funny, I do it with Jackson. We keep it very small. It gets that itch out of me, and I don't chop up my core positions. So if
These days, a lot of people do that via like weekly options or the zero date options to get
yeah.
that same.
Yeah, yeah, you can do it. Yeah, so do it with money that you don't care about losing. So it depends on the stock and where I'm situated. But lately, if I can if I already have, let's say, a 25-30% position in Roblox, but it gives me such a sweet spot that if I didn't have a position, but I might very well make it 50% for a little while and then reduce it back down as it gets
Mhm.
out, depending on where it is, how. So if all of a sudden Roblox now starts to explode out of, big green line breakout, that's a great spot. Even PLTR here, I know there's a ton of eyes on it, but to me, this is you got this giant big monthly breakout. Here's your second stage base, if you will.
Mhm.
I don't know, it's a 7 week cup and handle follow. It almost looks too good, but yeah, these are the sort of things that I'll stick with. If we get, let's say I didn't have any A lab, I'll give you the perfect example. Let's say I was slick enough to have bought it back here. Um, Even if let's say I got pushed out of a third or half under the 21 day, and I decided to keep half because the 50-day had already, was catching up. I will then do like I did yesterday. I didn't overbuy it, but when the market's working, right? If I had already owned it, which I didn't, I will do that sort of thing, right? Overbuy it, let it go again, sell the extra. And and the only reason I'm bringing us to the A lab over the NVIDIA is it's, this one that's gone from, what are we, roughly 46 to 260. It's just got more juice than NVIDIA. So
Yeah.
if I'm gonna do it, I'm gonna do it with a higher quality one. And maybe not necessarily this, but one that is really a true performance enhancer where if I'm right, it's gonna make a big difference if it goes.
This one's just been phenomenal. I mean, in that base from May to middle of July, just getting tighter and tighter, putting in those higher lows against the moving averages, and this
Yeah,
was chopping
this
up a
is
lot of people in that base for a bit.
Yeah, it's super choppy, right? It is not an easy one to trade. This is one of the choppy, and here's why I have to own it. Look at the quarterly earnings and sales. Look at the
Oh, sir.
estimates. I mean, this monthly is ridiculous to me. This is a big old bit broke out, but this is a big base on base. And so if you're, my guess is if you're looking at, Market Smith, you'll have stage one. But while this is a second base, this is really stage 1A, not stage two. And Bill would tell you this base on base is A is a stage one extremely powerful pattern. So literally this thing also, right? The breakout was just here, call it 151. So on the daily chart, right? All the way, where are we? So here's your green line breakout, right? Right there, it gapped through. Um, I I won't buy a gap on a stock that this whippy. So I waited. It hit the 50-day. I'm glad I was on the phone with Jackson and he told me, oh, A lab at the 50-day. And yeah, first pullback there. That's a Bill O'Neill rule to me. So if I can buy it a dollar or two off the 50-day, 10 or 20% position, that's so easy for me. And that is not a closing basis sell stop. That's I'm right or I'm wrong. And in a good market, again, if you're in the high quality stock in a group that's turning first pull, right? And again, it's also about experience. You know how many times I'm very comfortable with doing it, putting on a big position in exactly this sort of situation. If it doesn't work, I wouldn't, I don't even think about it again. And fortunately, it worked. I only put on 10%, not big enough, and I'll be looking to add, but only again in in a situation where I can put on that extra 10 or 20%, and I'm either going to be right or I'm out. I find that to be a lot easier these days than trying to even buy, unless it's early on buying and like taking an early entry through a pocket pivot and then trying to, set a 3 to 5% sell stop within a band of logical support beneath, which works, but I've become allergic to aggravation lately. I'll be quite honest with you. So I started hating the 5 to 7%. I've squished it to 3 to 5, and now I'm like I just want to be right or I'm out. And that has the anticipation at key support in tight areas, and stocks that is now that we've already followed, had the follow through day. So if you missed back here, let's say any of the other stocks, the ideal, that's basically what I'm looking to do. I mean, technically I'm late if I want to compare myself to the follow through day because I didn't get serious until literally the NASDAQ hit right around maybe a few days. I started watching the market seriously again before we hit the 50-day. And I'll be honest with you, I still think, what do we have? 3 months left for the end of the year. Let's say you're only up 20, 30% so far for the year. You bet your ass you can still do triple digits and kick the butt of lots of people in that US in what the
USIC.
USIC, yeah. And not to poo-poo that, I think that's the most amazing things.
Oh
Like,
yeah.
you want to know where the new young traders are? Look there. Those guys are awesome. But what I will tell you is you can feel like, oh, I missed the follow through in April. Those guys have been going since January. I will tell you this, I've seen it a million times. You can come in the last quarter and still do top three if you understand, so I mean, the big thing is what I would, the potential from here is still huge. I really do believe if you had the skill and the discipline, you could come in, start beginning of, and go October, November, December, and still be in the top three in 3 months if you do it right and the market cooperates. So that is, so that's what I'm doing here. So a lot of these positions I've been been building lately here. And I'll tell you, I got pushed out of my Tesla today because I was adding pullback. I was adding the 10-day. I got very top heavy at the 10-day on these last few days. And I don't want to deal with the gap down tomorrow just in case. So everything that I bought versus the 10-day, I took, I kept lunch money on the trade relative to what I was up when it was at its highs today, right? But, you know, I'll be forced it. And not the end of the world, as you see here. We're not green line breakouts. So, yeah, I have a chance to buy it back. I'm never too worried. If I have to buy it back higher, so be it. I'm pretty confident that I'll be able to get back in, even if it is higher. So,
Does your experience in seeing so many winning stocks give you that confidence? For example, looking at A Labs, seeing that move from 40 to 260, and then being willing to buy it up here at 190 on the pullback to the 50-day, knowing that confident that there's good upside potential left in the trade, or even on Tesla, up at 500 about to break all-time highs. Is your
Mhm.
experience in seeing so many big winners give you that patience and that selectivity to stick to those? And I've got a follow-up question after that.
Wait, so repeat again. What was
Sorry,
the
I ended up rambling again a bit. You've seen a lot of winners throughout your
yeah.
career. What is like a non unreal a realistic expectation for something like a lab, to look at years from now? Like, man, how far can
So
things go?
I picture model book, right? And if I'm
Mhm.
trying to find the next one to go up 1,000% to, I want that. If you start looking like, I think I was talking about it with Rye not that long ago. A lot of these moves on the big winners are 1,000, 2,000, 3,000, and in many cases, the biggest winners, the Ciscos of the world and the Nvidias of the world, some ridiculous amount. I think, if I'm not mistaken, the Cisco move from its IPO to the high in March 2000 was 65, 70,000%, something like that, right? So Bill, and let me tell you something. Bill O'Neill is the king of holding the stock through base after base after base for years. He's operating on a weekly chart, like Nick does it. I have gone the route of a meat rye and try and just that 21 day has become key for me, and not for my whole position, but it's a lot. I use that as a guide a lot more now on my positions than I did, um, than letting it all be for the fit. It just took volatility out of my account. So now it's not that I'll sell a whole position depending on where I bought it, right? If I bought it early enough, for example, you can even go back to the Teslas of the world. Once again, right? Rye bought that hood perfectly. Nick, he's yelling at us the whole. I think Nick started buying Tesla. I want to say he started at an average of 300. I think he averaged up to about 320-ish, and he's got a giant position in it. So for him, and what I would do if I were him and smart enough to have bought it back here in size, as I'll always give it a second day. So on the closing basis, as painful as it is, assuming this was the 21 day, right? The only reason I used the 10 today is because I got top heavy off the 10. But let's say this was my line, but I had a better bought position. If the green line was my line, I will typically wait for us tomorrow. And if it undercuts this immediately, I'll just be out. But what I'm hoping is that as long as it doesn't undercut the low of this day, I'll give it a few days to reclaim. And a lot of times it does. And a lot of times on that set, it just reclaims on that second day. Sometimes it takes a few. And it depends. It's going to be on a base stock by stock situation, because there's going to be times where a stock goes much further below its moving average and you have to, finagle the stop a little differently. It just depends. I hope that wasn't too convoluted. So I guess what I'm saying is on a normal position that I buy, let's say I'm up 20%, 30% on the position. Now it's coming in. We're testing the 21 day. Now I'm only up 21%. I was up 30% at my highs. Now on a closing basis, I'm watching that 21 day for a third to half of my position. Just so you know, this is my basic sell rule.
Yeah.
So depending on where that stock is overall, the group, where it is in its cycle, I'll sell a third to half on the second close below the 21-day moving average is basically how I do it. I have very specific rules for that. And then I wait for the 50-day for the rest. And right, if it's an early stock, I will tend to um, buy all that back. If I'm lucky enough, it pulls from the 21 to the 50, and I'll buy everything right that I sold back at the 50. Normally I overbuy it and then let that go on the way back up, which I get, what we've always called, or I've always called, swinging around a core. So a
Yeah.
lot of times that's what my performance enhancers. I try to stick to the stocks that I'm already in. Um, I'm in six stocks now. I try to keep it to, if I can, I'll try to get it pushed into my best three. And then I leave maybe 10, 20% plus, some margin, depending on how comfortable I am, how cooperative the market is to juice those positions up or to, let's say, anticipate the quantum names. If my cushion right now, it wasn't big enough from, the most recent push off the 50-day. So it's always a matter of where my progress is overall on the account, the positions that I have, how many do I have? A lot of times, if I already have five or six on and I'm dying to buy another one, a lot of times I just won't buy it or I force myself to sell to replace it. So once I start getting out over my skis on five or six stocks, it's too easy for me on a stressful down day to make mistakes is what I have found. So dealing with fewer is better. Ideally, I love to deal with no more than five, including extra my extra two or my extra couple stocks or my extra exposure on the stocks that I already have. So I'm like that 3 to 5 stock number is my sweet spot. I have an easy time managing about that many stocks. Once I start getting past that, my brain starts short circuiting.
Is there I'm guessing you're gonna continue to watch Tesla over the coming days and weeks as it potentially rebuilds
Listen,
out.
and who knows, I wouldn't be surprised if it opens inside day tomorrow and I get forced into playing it back off the 10-day. So I'm trying to anticipate, like my guess that it's gonna break out and explode. So I'm trying to at least get something on before that happens if I can. I was greedily trying to work the 10. But yeah, let's say this thing opens gaps up and stays above the 10-day. Now I'm back. So on strength, I'll be watching here. And along with its 10-day moving average, if you want to get fancy, right? Like if I might throw up that 8-day EMA. Doesn't make a very notice where it is. They're uh, zero difference really. Pennies apart on a $400 stock doesn't matter. So this on strength, I want it above the 10-day, and let's say this little swing high. If it opens lower, then we'll just see what happens. I'll be watching the purple and cayenne lines. If it looks like it's going to undercut, bounce, reclaim, I'm always waiting for it to show me support there and then begin to bounce. Once it starts to bounce at what I believe is key support, where my expectation is, that's when I go to my 3-minute chart and try to work my way in, versus the low on that U-turn. Or let's say I'm watching a U-turn reclaim. If the low is too far away, I'll just use the moving average that I'm watching the reclaim on as the sell stop. And I always try to do nothing as all or one. I'm a big fan of working my way in, working my way out. So a lot of times all right, I'll sell half at the low, half at the average, half at the low, that sort of thing. So it's not always all or none for when I'm wrong.
Gotcha.
Yeah. So yeah, it just depends, right? So I won't be too bummed if now if it gapped up and gapped up through the all-time high, and then I'd be a little bummed if I was chasing it up there. But yeah, I'm a bit of a Tesla junkie also. So
Yeah.
just I don't drive one, but that stock has been very, very kind to me over the years. So I have some stocks on the no trade list. This is one on the I can't stop trade list. So
There you go. Love that.
What's one of your favorite stocks ever, or favorite like most memorable trades ever that
you
you know
know, it's crazy. I'll tell you. So here, I'll give you my high quality best trade that I'll always remember. The 99 time when brokerages were just coming online, the beginning of the internet. Charles Schwab started trading like a growth stock, right? Because it had, now anything that has quantum or AI explodes. Back then, anything .com exploded. So Schwab became a .com stock. I put on a big position right at the breakout. Um, and I sold it top day. It was down that day by the time I sold it. I was literally I was on the road. watching CNBC, which I never do anymore. And I was like, I found myself jumping up and down in front of the TV, like, woo, cheering. And I go, if that ain't it, right? And actually, I had a buddy who, has always been listening to me, and he's like, "Aren't you the one telling me you're supposed to sell when you're cheering like that?" And I'm like, "Yeah." It's funny you say that because I was just thinking the same thing. I literally picked, this is when there's no online trading. I picked up the phone, called my trader on the O'Neill desk, and sell Schwab at the market. By the time he sold it, it was already pink for the day. I was cheering when it was blue by the time, but yeah, I bought the breakout perfectly, sold top day, but not while it was up. I didn't sell top. I sold negative on the day, but the highest day of the run. Less significant. Now here's my low quality trade. Okay, so after the market finally put in a bottom in, I guess it was 2002, market followed through, but it took a few months before cooperation began. It took till about summer. And that summer, I remember I'm like looking at this little, and I think the company still exists today. It's called Travel Zoo, T Zoo. And my guess is you've never used it. I've probably never heard of it. I mean, this how long this has been around. I've never used it. I've never heard of anyone who used it, but it turned into here. Let's. Oh, that's right. I don't have the data that goes. But anyway, this thing started absolutely ripping in 2002, 2003, and it was one of those I didn't buy it perfectly, but I swung trade, I guess, if you will. I had a position and swung around. I just absolutely killed it in this stock. And I don't remember if it had earnings or not, but all I could remember it was one of these .com stocks that I've net to this day, I don't think I've ever, most people will be like, what's Travel Zoo? And if they know what it is, I mean, tell me if I'm wrong. Have you ever used Travel Zoo? Have you ever heard of it? Have you ever heard of anyone using it? So anyway, I've made a lot of money trading Travel Zoo.
I'm looking at this on the monthly time frame. I've got it on 2000. Goes from 10 to 110, just randomly here in the middle of 2003. And
Yeah. So that, yeah, it was that. So this is one that I just remember. It was super kind to me, like, Tesla style. And to me, just a total, so funny because it's just total garbage. What the hell is Travel Zoo?
would you trade this today?
No way. No way. That's it. Even here, I don't think I would have done it. The only reason I did it, it was because, it probably not, it was like a .com heater that you could just,
Mhm.
it was cooperative. I could buy it and it would explode. I'd sell, so I'd buy it back. My personality got along with it. And it's amazing. There are some stocks like a Tesla that my personality works with really well. And then here, I'll show you one of the best stocks of all time that I have is on my never trade again list. Look at this. And
Yeah.
if you go back beyond it, this stock has stolen so much money from me, I can't begin to tell you. So for whatever reason, I can tell every time I've put on a significant position in this, which is clearly one of the best stocks, period, if not in its group together. You look at it and go, Ross, how do you lose money trading that? And I'm talking about back here. I couldn't make a dime, right? So, and you'll hear a ton of people that from that time, they made an absolute killing. And so for whatever reason, yeah, I have never been able yeah, this is on my never trade again list. No joke. Not just do not trade, never. It's me and ServiceNow to me, it's a cursed stock for me. And it's right, and I look at that monthly and I think it's hysterical because there's nothing wrong with it, but I can't trade it. Whereas Tesla is good to me. Yeah.
We've-
SLCI was another one that was really good when that thing was on fire, and it was fine. That one was easier because chips were a legitimate group that had earnings. It felt like there was a story there. But that thing was wild and crazy. You had to buy it exactly right. But when MSTR, I'll give you another one, right? When Bitcoin was on fire and MSTR was kind of like, that's another one, right? I will use those as performance enhancers.
these would be strictly like performance enhancers for someone like
SMCI, I was a position, but MSTR never, because that's just Bitcoin, really, right? It's a like that it's a software company, but the CEO Michael Saylor has basically made it a Bitcoin. It's Bitcoin. If you look at the balance sheet, it's Bitcoin.
Yeah.
So, but here, let's pull it up. I'm sorry, I'm like asking you to remember. No need to. So back here, when this business is going on, I will trade the heck out of these things, even though it's not a growth stock. And in general, I tend to stick to traditional style growth stocks. Mostly, tech. I will go to biotech, less so now. I have much stricter rules around that after the disaster I've made that one time. Um, Uh, yeah, so SMC, so anyway, yeah, SMCI had a reason, whereas MSTR, I'll never, this is going to be purely technical. And, I trade these when I'm doing them when they're on fire with one finger on the sell button, with very strict lines in the sand. And I just got in a rhythm with this. I'm in a rhythm with Tesla, whereas Service now, and I'll tell you another one, believe it, don't ask me why I remember, but this stock is cursed for me too. And look at it.
UTHR. What do we
Mhm.
got here?
I can't tell you how it's yeah. I have a good buddy that runs a billion or so in healthcare,
Oh yeah.
and it's just so we talk about this all the time. Anytime yeah. So, but yeah, this has been a bane to my existence along with ServiceNow. So this is on the never trade again, do not trade list. And look at it, right? So I don't know what it is.
I might stick away from these too.
No, it's just let's not. It's just me. I mean, trust me, everyone. So the personality is a big thing. So a lot of times I do. After doing making the model books with Mike and Charles for Bill, and I've made a bunch on my own, and I started to notice most times when Bill has all of his money in one stock, it's one of those big liquid names that respects a short-term moving average until it doesn't. They're very organized, liquid. Um, they have an aggravation-free personality
Yeah.
in general, even if they're big movers like the Qualcomm at the time, AOL, those big liquid ones. So I'm like, I'm watching the king. What's he doing? Right? When he puts all of his money, and I'm talking a lot, like a lot into one stock, it's always one of those stocks that's super tight and trades in an organized, what I would call less aggravating manner than many others,
What
right?
do you think one or two of those stocks is right now?
What would he own? Yeah, so it's funny, I automatically, I don't know, I'd have to go back and look, but I would say, I don't know if Hood would be on there, but it's going to be one of those big ones
Yeah.
that, follow through at the perfect point that super liquid follows it, it's always one of those. And I'm not saying it would be Hood for sure, but it's always going to be one of those super liquid names with giant earnings that trades in a semi-organized manner, if you
Yeah.
will, right? What would
Man.
it be specifically? If you gave me a list of names, but yeah, I could take a wild guess, right? Because it's not going to be some of the Fang names are just slow. He's going to look for something that probably moves a little faster than an Nvidia, but trades like a high quality Nvidia when it's going, right? Like when Nvidia used to be hot. That. It's always one
Yeah.
of those stocks, always.
Now it's $4.5 trillion
Yeah.
after going what 20x.
Yeah. Yeah.
That's
My partner David, when we closed the fund, he told me he took his money out of the fund. It was a significant amount. And he told me, Ross, I'm putting it all in Apple. It wasn't all that, and I'm just leaving it. And he did. That was in 2010, and he hasn't sold it.
wow.
He's only added, right? So that's, you
Good
know,
move.
yeah, not right. So so when I say that he's another one of those guys who's just, he's got that, when he's right, that cowboy size, and it's amazing. So yeah, but the reason he had the fundamental confidence in it, and he, from the, he one of the smartest guys that I know. I wish I had listened to him. I can tell you why I didn't, but that's for another day, and people might want to have a glass of wine before they listen to that horror.
Apple is up a cool 2,500% since then.
Yeah. Oh, yeah, if it's insane what he's done with that trade. I'll just leave it there.
Hey, before we finish this out, any true, just like, 1 to 2 liner foundational piece of knowledge for, someone in their first 1 to 2 years of trading, to make the journey a little bit easier and
Well,
fast.
first of all, I would say like a lot of people, I know it's talked about a lot more now, and it's a good thing on Twitter, which is the mental, psychological side. Not only as it pertains to your trading, like and Mark, yeah, I'm sure you've read it, right? Mark Douglas's give me the title, I'm drawing a blank. Here, let me look. We're gonna go here. I'm just gonna stop Mark Douglas's book, which is
Trading in the zone.
there you go, trading in the zone. So that directly to trading. But getting balancing your life and not letting your personal, let me just tell you, I learned the hard way that, your personal life can have can mess up your thinking to say the least. So I'd say it's important to understand, to keep a balance, for sure. Understand the Mark Douglas trading in the zone type of trading, how it relates directly to your trading. Like here, off the top of my head, for example, just we'll find that what's I'm just trying to think of one of my more favorites. So for example, let's say your last 3 trades, you followed your edge perfectly, but it hasn't worked. You had to take 3 losses in a row. And now human nature takes over. You start to get a little emotional. You're losing money, fear goes, and then you make your next trade a little smaller, or you hesitate because, and he explains it so beautifully. But if you can keep your head straight and you're following your rules, the chances of that trade work, those last 3 trades really have no effect on your next one, and it's hard. I'm doing a horrible job of explaining it, but it's those sort of things that you're aware of when you're doing them. But for me, it was trading when I shouldn't be. Let's just say, sick parents, relationships, that sort of thing. Even in a good market, after you've proven to yourself, be care. I would say that always be aware, be kind to yourself, don't beat yourself up. Give yourself 2 or 3 years to really get it under your belt. I'll be honest with you, I learned it as a retail broker, and then I got to O'Neill, and after reading the book and thinking I knew so much, after 2.5 years of reading it and talking about it to all my, retail clients, I realized I knew nothing, right? And I literally started learning. But that being said, when my real, I'm lucky to have Bill there. So the prior education, don't get me wrong, like reading it and going through it, but they really refined me, right? I would sit and talk, and they'd ask me questions, and but I would say it's that 2 to 3 years. I mean, unless you're superstar, I haven't found anyone outside of it. And if anything longer, try hard to um, give yourself a chance. Be aware of your personal life. Um, if you're in a bad way outside of trading, making good trades is very difficult for whatever that's worth. Maybe that's obvious to everyone else. I learned that, the hard way over time, and it's fine, right? You deal with it. You come out, I'm
Yeah.
not suffering. Um, After that, I would say it's all about once you know the rules, right? Once you know your quantitative rules, it's just a matter of time, and you'll get that down. Then it's risk management. It's a matter of for me, I think it's a matter of finding whether it's Mark Minervini or Can Slim or Stan or Maggie or Brady Bond or any those these guys have all taken a bit, it's all a similar growth methodology. For me, I'm doing something a little different. I call it Stan Slim as a joke, but really I've done nothing except I feel like Bill invented the car, right? With Can Slim. I'm not reinventing the car. I'm just putting on some exhausts and some cool rims and that sort of thing. I'm just so and who I heard say this so long is the Fib Queen. I heard her say I was at a Vegas conference and people set up their booths and she had a big crowd around her and she's right. It really struck home with me. It's about finding something that works where over like it's proven. You've got a system that works. Um, it's about making it your own, right? Everyone learns differently, thinks differently, has a different perspective. And so you can take not just you can take any of these methodologies within there, because I'm not breaking any Bill O'Neill rules. I've just molded them to fit my new system, so to speak, or my new entries. And he might think if he was still around, tell me I'm nuts for doing it. But I'll tell you, as long as you have a proven edge and you're managing risk, you're good to go. Managing risk is all that matters, right? Once you get your philosophy down and you have an edge and it works, and it all comes to managing risk and then the money comes, right? So for me, those have been the stock picking is the easy fun part, I think is what I'm trying to say, right? If you can keep your mind straight, and that means not letting the market get to you, not letting stressful life get to like when those things happen. um it's all about patience, optimal entry, risk management. And I think that would probably, whether you're using fibs or buying off the bottom or whatever your methodology is, that not having FOMO, always having a good idea of where you are. I could understand if we all of these stocks we just had a 98 to 2000 type of move already. Tons of leaders were having climax tops, and then you missed all that. Then I could understand. But we are what it looks like to me at the very beginnings of things breaking out to new highs. The new companies related to AI, quantum, and space have only started to emerge, right? Think of all these, they all need semiconductors, all the stuff, right? This was the Bill O'Neill New America thing. So I'm just so damn excited for what's out in front of us over the next few years. So if you can find, whether it's, I don't care what it is, it can be stands, bills, it doesn't matter. Get it down,
Ross's.
manage risk, keep your head straight, the money will come.
I love it.
Yeah. So
Thank you very much.
that's in a nutshell, and it's simple but not easy.
Heard, folks.
So,
I am.
and I would say, and I don't want to be presumptuous, but if your audience, whatever, you ever want me to come back and answer more questions, let me know. We don't have to squish it all in tonight. I'll come back and we can do it again.
Ross, gladly. Thank you very much.
Wow.
Everyone in the audience has just been talking about how awesome some of the things you're saying. They were repeating some of the lines in there to remember. And just the sheer knowledge, experience, wisdom that you have. And then to be willing to share it, with us here today.
Yes.
I will gladly take you up on that offer
It's
to
awesome.
keep you as a resource. Thank you.
Awesome, awesome, awesome. Yeah, I mean, next time, yeah, we can go through, and if you want, I've got a constant list. Here you can say, here we'll do this. Like here's my list from today. You'll see it's only 40 names. So here we've got it. Right, you record this, right? So here,
Oh, yeah.
and this is just the list that I put together as far as stuff that I want to have my eyes on for tomorrow, potentially, right? And it may be two or three or nothing that happens or whatever. But anyway, this is my little list for going into tomorrow.
There we go.
And oh yeah, so what I was gonna say next time, right? So we can do general, and if you want, we can go, I always have I pretty much always have this list up to date. We can go through stocks, we can take requests, we can go through whatever. I'm always willing to share exactly how I do things, what I'm holding, so on and so forth. So I'll shut up now. Yeah,
Oh,
just let me know.
hey, no, Circle, you got Circle on that list?
Hmm.
It's made a nice 16% move today. Remounted the 50-day from underneath. This is a nice little candle today.
Right. It's just coming up off the bottom. So I wasn't slick enough to catch any on the way up, but if it can show me a push up through these moving averages, I'll just wait for it to tighten up again. Um, so maybe it does, maybe it doesn't, but that's ideally, right. We got the moving average, I'm sorry, the RS line back through the 21 exponential moving average, the big volume push through, got a little resistance at the orange 65 exponential, but yeah, I'll just be watching for it to I'm hoping that it will tighten up and give me an entry, right? Core
Similar.
weaves, core weave, similar thing, right? This
Yep.
this I think has mega potential, right? This one's a little further up the right side already, but this is no hood or right. Bill O'Neill saves this for what the little guys. Like when I first started, I started with $5 million. Bill's not going to put $500 million into core weave, right? Not to mention I don't. It's liquid as can be. Maybe you could get away with it, but this kind of whippy stuff, I would say the likelihood of him having a giant position in core weave would be slim. Yeah. So anyway, um, if I can catch a circle doing this sort of thing here, right? Push up through and tighten up, I would start to anticipate these tight closes possibly, right? With the sell stop at a low or the 10-day as it catches up. And a lot of times I will trade off a short-term moving average. And if the market's cooperative, the group, right, it just gets me in and up and I'm good to go. And then I can start raising my sell stops.
Very nice.
So,
Thank you, Ross.
yeah.
Thank you
So
very
anyway,
much.
I'll let everyone go. I know it's been a while. Thank you so much for everyone staying and listening to me blab. I'll look forward to coming back then. Just let me know when you'd like me.
This was awesome. Thank you very much. Take care. Have a good evening. Yeah.
Absolutely. Good night, everyone. Thank you.
You guys, thank you, Ross.